Imagine owning a property where money flows in every month, or where the land you hold doubles in value as the neighborhood blossoms. Which wins? What if you didn't have to choose? In this video, we'll show you how to select the perfect neighborhood that aligns with your investment goals. Whether you're hungry for steady cash flow, long-term appreciation, or the sweet spot between both. Are you looking for immediate rental income or long-term value growth? Cash flow targets might mean seeking neighborhoods with strong rental demand and yields. For example, 5 to 10% cash-on-cash returns, as seen in cities like Cincinnati, Indianapolis, and Columbus, Georgia. Appreciation investors might prioritize places showing strong value growth, sometimes averaging 10% annual appreciation, like certain pockets of Charleston, South Carolina. Why location matters. Cash flow. Friendly locations often include affordable, stable neighborhoods with solid tenant demand and reasonable purchase prices. Appreciation hotspots are areas with growth potential, rising home values, job markets, and economic strength. Charleston, South Carolina is prime, high rental demand, diverse economy, and strong home value trends. Local examples around Charleston, South Carolina: 1. West Ashley, suburban appeal with major redevelopment underway. Ashley Landing is being revamped into mixed use, including apartments, retail, and green space, transforming future appreciation potential. 2. Downtown Charleston and North Charleston. Historic charm and vibrant rental appeal mix aesthetics and renters' demand. 3. Single-family and historic neighborhoods like Mount Pleasant offer easier financing and strong long-term appreciation. 4. Multifamily units in emerging zones deliver higher upfront cash flow and less dependence on market timing. Use strategic neighborhood analysis. When evaluating neighborhoods, consider high-value data points. 1. Rental yield versus vacancy. Rentastic emphasizes comparing yield and vacancy rates to spot areas with positive cash flow and stability. 2. Population and job growth. Areas with job migration are forecast to appreciate. Real wealth markets. Birmingham, Chattanooga show 7 to 12% cash-on-cash returns. 3. Forced appreciation potential. Developers and investors add value via renovations, curb appeal, turning undervalued properties into high-performing assets. 4. Tax strategies. Investors who pair property ownership with savvy tax benefits and REPS can reinvest more capital back into growth. Here's how you can apply this to Charleston, South Carolina. Define goals. If you want immediate cash flow, consider multifamily in North Charleston or West Ashley, especially as redevelopment creates short-term rental demand. Balance with appreciation. Look at single-family homes in historic Mount Pleasant or downtown, simpler to rent long-term and valuable over time. Capitalize on redevelopment. Ashley Landing's redevelopment invites both tenants and buyers, enhancing both cash flow and value. Mixed strategies. Combine a cash-flowing duplex or multifamily with a turnkey single-family home set for appreciation. That dual path builds income and equity. Use tax and value-add tactics. Renovations, like energy-efficient upgrades or cosmetic refresh, boost both rent and resale value. Be crystal clear on whether you're chasing cash flow, appreciation, or both. Choose neighborhoods aligned with your goals, like Charleston's historical charm plus modern opportunity. Layer strategies, rental yield, redevelopment, tax optimization to build a resilient portfolio. Hit like, subscribe, and comment which goal speaks to you most: steady income or long-term growth. See you in the next video.